We have a real big class today. A lot of people had signed up for this, so I just want to make sure we get a chance to everyone in here. Looks like we already got 30, 40 in here, but again, there's a lot of folks signed up. So let me just kind of slow roll like I do. I like to do a slower introduction. I've got still a minute before the hour. So, so the idea of this, well, first of all, my name is Jeff Clark. I'm a regional director here with GoldenCare. I've been with GoldenCare for 25 years now. And my job basically on a daily thing is to compare, contrast long-term care plans, short-term care, home health care only, the long-term care and life hybrids. And so we help our brokers with finding, designing, finding the right product for them based on what they bring us. You know, whether it's a widowed lady with osteoporosis and a compression fracture and she's 73, or a married couple in their 50s that's very healthy. GoldenCare has a wide variety of great LTC products, short-term care, again, all the products under that care senior product arena that help our brokers with whatever they bring us. So I guess I've been doing this for about 20 years. I did start my first five and a half years selling exclusively long-term care. Matter of fact, using a version of this very presentation. Now, of course, it's been modified, changed, adapted over the years for different laws, different things, but we do try to keep this updated. It's been used for, again, 25 years or more. It used to sell, I don't know, 5 million in long-term care a year across the country. So this presentation is responsible for literally hundreds of millions of long-term care sales. So if you're not someone who uses a presentation, you know, early on in my career, one of my mentors, a guy by the name of Mark Randall, used to kind of advise me. I was a young salesman thinking I kind of knew everything. And I knew everything about it. I was fine. I was a good salesman. I didn't really need to have a track or you know, he pointed out to me that having a PowerPoint, having a type of track to run on, you might skip over a point that you don't think is important. You might be some couple slides that you like decide to take out, or take this presentation, throw this slide out, that one out. You know, a lot of research has went into this thing over the 25 years. In other words, a lot of these things are hitting hot buttons that people at different times are going to be hit with. So even though you might not think a certain slide is important, you may have taken one out that would have been the actual slide that would have sold that client you're sitting across from. So it's not a bad idea to have a track to run on, to have a presentation. That's kind of where this came from. So we decided to kind of just teach people how to sell. We do a lot of product stuff here. We tell people what products to have. We tell them how to use these products. We tell them, you know, how to quote them, how to get materials for them. But we don't really tell people with how to sell the product itself. And that's kind of what today's presentation's about. It's a fun one for me because I'm going to act as if I'm just selling to a customer. Of course, I'm going to stop and kind of tell you what that means, or the meaning we're trying to get out of this slide, the different wrinkles you can kind of spin off of from this slide. So, you know, without further ado here, I'm just going to start going through this presentation. I expect there'll be some questions at the end, and I'll go ahead and bring that part up, and I can type some responses in there, or I can speak to the questions as they come in, but I'll probably hold those towards the end. So if you want to just kind of type them in there, and I'll wait till the end of the presentation, I'll see if I can address some of the main ones or the most common ones. But with that, you know, again, just want to thank you for taking some time today. I hope what we're about to do here is helpful for you in your selling efforts. So without further ado, let's go ahead and get this started. Okay, so the missing link. Let's see, well, there we go. Okay. I've been starting a lot of webinars this way, so I won't spend too much time in this, but I don't know how many of you are aware that long-term care has never been a hotter product. In my 25-year experience, more people right now are concerned about long-term care. Matter of fact, 85% of Americans believe that it's more important than ever to have a long-term care plan. Why? COVID. All right, let's face it. 3 out of 4 people that died in Canada, well, and in this country, but numbers are always kind of cooked in this country. We can't seem to agree on any stat here. But essentially, this is a facility type of illness. 3 out of 4 people that died from COVID were in a long-term care facility of some kind. And believe me, people are aware of that. You know, and just some quick numbers here. So for those people receiving, you know, maybe you have a stroke, maybe you have a heart attack, or, you know, you have some Alzheimer's and you're receiving some care at home, only 3% of those folks contracted coronavirus. Only 1% of those folks died. Now, if you're receiving your care in a facility, 37% of people receiving care at an assisted living or a nursing home contracted COVID, and 11% of those people died. So it's safe to say that you are 11 times more likely to die if you go to a nursing home or an assisted living. Now, we used to be able to say that, you know, the nursing home wasn't the best care. We didn't want to end up there. But now, literally, when you're 11 times more likely to get to die from diseases and stuff, when you go, it is on people's mind. And I want to impress upon you how much the public is actually looking for, really hoping that someone will ask them about long-term care. I've never seen a more receptive audience towards long-term care. It was always a tough subject to bring up. A lot of agents shied away from long-term care because it's one of those things that was just hard to talk about. And, they called it nursing home insurance. And, it's not going to happen to me. My kids will take care. All this, but I'm telling you, more than ever, people are more receptive because of COVID-19 to talk about long-term care. They're waiting for agents like us to actually bring the subject up. So just be aware of that as we move on. Okay. So again, we've seen these pictures and the whole facility and et cetera. Okay. Oh, another thing that's helping the awareness, if you guys haven't been following, the Washington state has forced upon all their citizens to have a long-term care plan. So what they've done here is they've said, we're going to start taking 58 cents out of every $100 of earnings. And this actually says beginning January of 2022 in the slide. That has got pushed out to July of 23 because they basically just couldn't get the thing put together in time. But essentially how it's going to work is every working person that pays taxes in the state of Washington is going to be forced to have long-term care. Well, what this did is you could privately opt out. You could go to the private market and buy a plan from people like you and I, and you could avoid this tax. And frankly speaking, to anyone under age 50, you were a lot better off to buy a plan on the private market. You got a lot more for your buck. You still got your tax deductions. You avoided this tax. And so there was a rush like we have never seen out of applications coming out of the state of Washington. As more states do this, there is poised to be an explosion in long-term care. So I think you're in the right industry. If you're trying to get do more long-term care, your timing is really good. Okay, the missing link. This is the presentation. Let me just go through this again. This should take about a half hour. I'm going to stop and explain some things, so hopefully it won't go too long after that. But normally this presentation should take about a half hour to give to your client. So let's roll through this. So we start out. What's the agent's role? If I'm sitting now across from my client. So my role in this deal is I have to understand the long-term care industry, research the insurance companies and the policies, represent lots of carriers to offer you the coverage that fits your individual needs. In other words, I'm going to take care of all the shopping, the industry knowledge, and my job in this thing is to be well-versed and understand products, concepts, everything about the long-term care industry. So I want to make sure I tell them my experience, the fact that I've written 750 of these things over 25 years. I want to make sure they know that's my role, is to understand the products, the industry itself. So you kind of want to let them know that you're well-versed in this. This is your thing. Okay. Steps in the process. And this is kind of a takeaway right away. I used to tell people, look, I'm going to go over long-term care with you today. I'm going to explain to you how it works. I'm going to tell you the different product options that are out there. But I can, by no way, shape, or form, sell you a long-term care plan today. There's a process that has to be involved here. Okay, so first of all, the big thing is, can you qualify? Because half the people we submit this day and age don't qualify for long-term care. I'm going to sidebar here for a second. I think tomorrow and the next day, my colleague, Tom Randall, will be doing the pivot presentation, same version that you're looking at right here, except for if I go through and ask some initial health questions, it allows me to pivot to different products. Because naturally, not everyone you're talking to is going to fit in a traditional long-term care plan. They tell you they've had, I don't know, they've had a knee replaced, they had a cancer 2 years ago, or they had lupus, or there are a lot of health ailments that long-term care maybe is not going to touch. They've had their second stroke, a TIA. So when they say these kind of things, we talk about their health. Well, then you can automatically alter the presentation as you're going through based on where you click on the presentation. It will help you, I guess, take them to the only products that can actually apply for. There's nothing worse than go ahead and creating a need and then leading them right down the long-term care path, which they're not going to qualify for. So that pivot presentation is the next 2 days. It kind of takes this one to the next level, but I strongly suggest you hop on that one, because that presentation is, and I'll just say, the best presentation of long-term care going. With it has all the locals, whatever state you're selling in, you can click on resources for state, local assisted living facility costs, nursing homes, home health care costs, average, the policies that are out there. Every single policy we have, you're going to have access to their supplies, to their, whether it's electronic app or In other words, it's going to make you an overnight expert in long-term care. Everything is at your fingertips. You point. If they ask a question, boom, you've got it. If they want to know what the local costs are in Hartford, Connecticut, you have a link that's going to take you right to the cost of care surveys, Genworth and Mutual Omaha. It's going to show you, to the dollar, how much home health care aids are in Hartford, Connecticut, or if you're in, I don't know, Burbank, California. Doesn't matter. It's going to have everything in there that you would ever need. It's everything that GoldenCare has to offer packed into a presentation. It's dynamite. So anyway, let's continue. So steps to process. So if I'm telling my client, first of all, can you qualify for long-term care? I'm going to ask some really subtle health questions here. Do you have any dementia? You have any strokes, any cancer I should know about? Okay. So we're going to ask about qualifying. And then, do you need long-term care? We're going to educate you about long-term care a little bit. Hopefully we're going to design an affordable plan for you. And all I can do again is start the process. Okay. I can't sell you long-term care. You have to be approved. You have to be, passed with your health. So this is kind of the steps of process. Does this process sound okay for you? Now maybe proceed. Okay, can you qualify? And again, this is some very basic health questions. I don't have to bore you with this. Have you been hospitalized? Are you taking any prescription medications? Naturally, if we're looking for some of these knockouts, if they're on some type of a, Alzheimer's dementia medication, or so, we're going to try to just snuff out kind of what we're actually presenting. So you want to talk about some quality before you spend a whole hour going over something they can't have. You want to ask some of these kind of, can you qualify? All right. Do you need coverage? Then we're going to talk about suitability here. All right. So if someone's sitting in an apartment and they have no money and they only have $3,000 in their bank accounts, they're already qualified for Medicaid. This wouldn't be a good long-term care candidate. So we do kind of want to ask them some income, assets, what their personal goals are, their needs. I like to kind of talk more of a family thing than say an income and assets. I was always more on the emotional side of the sale than say a straight financial. And some people are very, let's just talk turkey and I want to save my money. Or as you go through this, you'll find out that this choice independence and this emotional thing is probably the better way to go about it. But the states do require that you at least have a knowledge that you have some assets to protect. That's why you're buying long-term care. Now, unfortunately, the states get really hung up on the assets, and if they have to have at least 20,000, 30,000 to buy long-term care. And to me, I'm not sure I'm crazy about the states. Some financial publications will say if you have less than $500,000 in assets, if you have less than 200,000, you don't have to worry about long-term care because you're going to fall back in the state pretty quick. I so vehemently disagree with this thinking. If you look at the average retiring American couple, it's pretty frightening how little they have. It's like 267,000, I think, on average. So there are a whole lot of folks that only have $250,000. And so, in my opinion, only have 200,000 or 500,000 in their nest egg. Those are the people that are more at risk from suffering a $200,000 hit from a long-term care situation by husband or wife. So they say if you have over a million those people who have $1 million, they can afford to lose 100 grand. People that only have 150 grand really can't afford to lose 100 grand. So some of the states, some of the financial publications are saying that long-term care isn't for people with only. I think that is so wrong, because what we're talking about is not wiping out the other spouse, letting them enjoy some independence and some choices with their care with the little budget they have. So to me, there's more of a need if you do have a lower. So this whole income and assets, we're supposed to by law go through this to make sure they have something to protect. Okay, I think those thresholds are lower or should be set lower. All right, doesn't health insurance pay? And this is something you need to go through with them. A lot of folks are out there are under the false impression that their current health insurance kind of has paid for long-term care. In other words, if I get in a car accident and end up as a paraplegic, I have insurance. In reality, yeah, they're going to fix you from the car accident. They're going to repair your organs. They're going to set you up with a cat. But once your care levels off, say 20, 30, 60, 100 days later, you're not going to be covered by any of your current insurance, or even when you end up on Medicare. Medicare is only going to pay for a limited amount of skilled care during that first 100 days of recovery. And frankly, you're not getting 100 days anymore. A lot of long-term care policies are set up with a 90-day elimination because they're expecting this 100 days of care from Medicare. Well, I tell you from my own experience with taking care of an aged loved one with my father's care, you'd be surprised at how little Medicare is approving anymore on some of these ongoing, someone falls and breaks a limb, or just old people sometimes fall. As they start needing more and more care, Medicare is kind of backing away from doing more and more. And this is just my own point. When I'm kind of going through some of this stuff, health insurance and Medicare, I just kind of politely ask the people, you know, the Medicare budgets, you know, the baby boomers. Let's see. Yep, right here. Let's just go to the slide then. So I explained that Medicare doesn't cover it. Their private current health insurance, if they're under 65, doesn't cover it. And then I talk about why is it such an issue? Because Medicare, frankly, is running out of money. There's a booming population coming here. And I'm going to pause right here again. I'm going to tell a little story that I used to start before I even went into long-term care. And maybe this is a good place to tell this little story. But to get people to wrap their heads around what type of a crisis long-term care, why it's such a big issue today, is the fact that, and this is a story I stole from Mark Randall, because I watched him give this presentation live to many consumer audiences around the country. When we do some training for agents, we'd also do some consumer seminars. And watching him, really the original author of this, there's some stories you kind of wrinkle. So I'm going to share this one. I used to tell people, you know, in this country right now, if we were to take every single carpenter, every roofer, every framer, and every masonry and every cement layer we have in the entire country, and then if we were to take every single resource, every 2x4, every nail, and every piece of shingle and every building material there was, and we took all these people and all this material and all we built was nursing homes and assisted livings, we would never be able to build enough facilities to house all the people that are coming. The baby, 10,000 Americans turning 65 every day. And this is just the tip of the iceberg. Between 2007 and 2030, 89% the 65 plus population. The fact of the matter is, Medicare was written, when Medicare was written, there was 11 people working, paying into a system for every one recipient. Now that number is 2 to 1. There's only 2 people working, and the recipients are using 2 to 3 times the dollars. So the fact of the matter is, I kind of tell people that if you're counting on Medicare being your catch-all, Medicaid, you might want to recalculate that, because these programs have $156 million of unfunded liability. They can't keep up, actually trillion, 56 trillion. So at some point they're going to be insolvent. They already are insolvent, but we kind of keep delaying this. So I really want to let people know this is why long-term care is such a big issue. There is no safety net anymore. There's quickly becoming little to no help from the government. So in our past, your parents, your grandparents probably fell back on the state, probably transferred an asset here and there. They hid some stuff. They got help from the state. That help is disappearing. That's what this slide's about, however you want to say that. Okay, legislative changes. So what is the government doing? Because the government knows they're out of money, and they also know one of their biggest expenditures is taking care of all these folks on Medicare. So they've done things. In 2002, they started all federal employees were offered a long-term care plan, 22 million worth. Tax incentives. Now, most states have a state tax deduction for long-term care. Some are just a straight line credit of $100. Some are, part of your adjusted gross income. But as the federal and states have provided these tax incentives, those are kind of big things to have off. I mean, a lot of times, some states, I believe in Minnesota, it's 100. Some states are offering a $500 credit right off your taxes if you own long-term care. Own Your Future campaign. This is a letter that went out to every man and woman that was over age 50. Got a letter from their local governor at the time, with the official, I don't know, Missouri seal on it, that said, we are out of money. You need to plan for your own long-term care needs because this country is going broke. Deficit Reduction Act. Now, Deficit Reduction Act was sweeping legislation that more or less said no more of this transferring assets out of you or your family's name and then going and taking advantage of Medicare. In other words, you had people for years, the last 2 or 3 decades, that have essentially transferred $1 million farm into their son's name and then went over to the local nursing home or Medicaid and said, I can't, we're broke. And so therefore I need to be in the state paying for my care. So what you have is just all kinds of millionaires that were raping or taking advantage of that Medicaid system. Well, in 2005, and it's got the more to the the Deficit Reduction Act was written into law. Okay, this severely tightens these transfers, extended look-back periods for transferring assets. Matter of fact, a lot of them are retroactive. It doesn't matter if you a lot of people say it's a 3-year or a 5-year. I transferred my farm 5 years ago. I'm safe for Medicaid. They look very smart when they look at you and they tell you this. All right, I'll stop again here for a little. I remember going out to folks that would tell me this, and this is probably 2005-ish or 2007 or so. I talked to a family that has $2 million of land and farm. And, maybe they're not living that rich, but how farmers are. There are a lot of these folks have their land rich, but poor. And I'd tell them about long-term care, and I would tell them that, the Deficit Reduction Act says that, and they look at, my lawyer told me that if I transfer this away, I don't have to worry about it. It's safe, and I can go to a nursing home and they're not going to touch my assets. Now, the first problem I had with this, again, I was a younger agent, really didn't have two nickels to rub together, but I'm thinking, so here are some millionaire people that are basically taking advantage of welfare. Now, I always thought that welfare was designed or set up to help the truly needy and poor. Well, there's been so much, people taking advantage of Medicaid in every different way, whether it's Social Security disability or just that system gets just abused. But in this area, you've got millionaires that are taking advantage of it. But here's the reality. So when I hear someone say this, I tell them, look, here's the problem with transferring all your assets. So your son's still working. He's probably taking taxes. And what is he making? 50, 100,000 a year. So by transferring all of your assets into his name, you've put him in a higher tax bracket. Now he's paying an extra $2,000 or $3,000 per year or more in taxes. Not to mention, by transferring everything into his name, your grandchildren aren't going to qualify for student loans or grants or that kind of stuff. And the other problem is, your son's, the daughter-in-law, your son's new wife that you don't really trust. Yeah, guess what? When she divorces your son, she's taking half your farm. And all of this was to avoid just buying a long-term care policy for $2,000, cost your family the same amount of money. And by the way, those premiums are deductible. And then you don't have to lose control of your farm. You don't have to worry about your son paying more taxes. You don't have to worry about a divorce and losing your farm. All this is above board. And I know that your lawyer told you that transferring was the smartest thing to do, but I got to tell you, that is financially the wrong thing to do, and it doesn't even work anymore with the Deficit Reduction Act. Now, the problem here is that you have to get the states or the local Social Security offices to put the teeth in here to review the cases to say, I can see there's an unwarranted transfer of $1 million into someone's name. So case by case, unfortunately, some counties still go, that's good enough, and they'll approve the loan. But what I can promise you is this: as money continues to run out in this country, more and more local offices, Social Security offices, they're going to start, Medicaid offices are going to tighten and start using this rule more and more. I like to make my clients aware of it, that this transferring or hiding of assets, this game we played for 20 years, doesn't fly anymore. So that's the kind of thing I go over with them pretty soundly. Okay, moving on. All right, so who really needs long-term care? It's pretty simple. Do know that just because you're under age 65, it's cheaper, you can qualify for it, but 44% of people who need long-term care are under 65. I could talk about my brother-in-law who recently passed, but at age 61, he had a stroke. No, excuse me, he had a heart attack. About 3 months later, from the heart attack illness, he had a stroke. So then he suffered a second stroke. So he never really recovered from that heart attack. It caused a stroke. He lost the left side of his left arm, he couldn't walk anymore. So this is a guy who was doing, I don't know, he did things like sheetrocking and construction and roofing. And so now suddenly he can't work anymore. And my sister ended up having to take care of him. He died a couple of years ago. I think he lasted about 5-6 years like that. So, this isn't just for under 65 people, right? So it's very common to happen to underage folks as well. Where is the care provided? It's an interesting slide here. So 84%, if you see on top, of that care happens at home. So if you look at the community, when they say community, by the way, this is like at the home or etc. For people that are 65 and older, 13% of people get their care in a nursing home. If you're under 65, only 2.9%. So, where the care happens at home. So know that usually when people need care, there's going to be a There's going to be a family rallying around them, trying to keep them at home until maybe they can't. So a lot of this care is provided in the home, so it does affect your family members. Okay, rate stability. We just inserted this slide recently because the big concern for a lot of people, financial planners, are worried about long-term care or don't advise it, because in the past, the industry suffered a lot of rate increases, still are, from some of the policies that were written 10 years ago or beyond. The fact is that when long-term care came out, I don't know, late 80s, early 90s, the actuaries, the industry just didn't have a lot to go on how to price these things. And frankly, they missed the mark. They originally figured for a 92% persistency, 91. In other words, they figured 8% of people here would drop, not even keep their policies to fruition. They also had very decent long-term interest rates in this country. Well, as long-term care interest rates dropped, and they found out that persistency is actually closer to 99%. So they had missed that mark severely. That coupled with the long-term care interest rates going in the tank, would cause a lot of rate increases, recalculating, repricing. And so if you look at the policies of today compared to the ones that were written 20 years ago, the price has doubled, if not tripled. So the policies that are written today are way more, they have literally claims experience. I know just Hancock alone at one point was paying $8 million a day in claims. So, and I forget the number of billion, it might even be in the slide somewhere, but there's been literally billions of dollars of long-term care claims paid out now. So there's a lot more claims data to go on. There's just a lot more, and the industry has learned. So the Society of Actuaries puts together a likelihood that a product will have a rate increase. And in the year 2000, long-term care plans had a 40% chance of having a rate increase, and that average increase is about 34%. Well, if you notice, it gets lower and lower. In 2014, they have a 10% chance of a 10% increase. If you look at the latest one that was done in 2020, and I've just seen parts of this, I haven't seen it printed yet, or I'd put it in here, but it's a 5% of having a 5% increase. In other words, it's very unlikely they'll have an increase. If it is, it'll be very small. So the industry's finally kind of gotten a hold of the prices and how to price this. Having said that, they're still not guaranteed, but I can tell you just from my own seeing of the industry and being in it for 25 years, they are a heck of a lot more accurate and know what to do with the prices. So this is a slide you can use to kind of put that doubt to rest. Okay. So what is the two reasons why people need long-term care? They have these diagnostic related groups now for Medicare. So depending on, these are for acute needs, cardiac, hip fractures, things like this. And if you don't know this, and I don't know how deep you want to go in Medicare with folks, but I don't mind sharing with you this part. Medicare has set, just for own budget reasons, they have certain amounts they will reimburse a hospital for their care. So, for example, if you have a heart attack, it's a 3-day reimbursement. If it's a hip fracture, it's 6 days. What I mean by this is, let's just say a hospital charges $1,000 a day to be admitted to hang out there, just for round numbers, probably more, but all right. So when someone has a heart attack, John Smith has a heart attack, goes to the hospital. On the first day that he's there, Medicare reimburses that hospital for 3 days of care. They'll send him $3,000, $1,000 for each day. Now, if that hospital is able to get him on his feet and get him out of there in a day or 2 days, they don't send the money back. They keep that money, right? Because too often they can't get him out in 3 days. There's complications. He has pneumonia, so now he's there for 4 or 5. Well, they're not getting reimbursed for those days. So hospitals are constantly juggling this, getting people out of the hospital as quickly as they can and get them to a rehabilitation center, or even if it's a wing down the hospital a ways, it's the same building, but now it's being billed as a recovery nursing home rehabilitation center. So that cardiac, hip fractures, those are the first acute needs that we see, a need for long-term care. The second one's the big ones: Alzheimer's, osteoporosis, diabetes, strokes. So this is when I usually pause and ask my consumers, do you know anyone that's had a stroke or has had chronic arthritis or dementia? And I'll just shut up, and honestly, folks, they'll always have a story of someone, almost 99% of the time. Yeah, Aunt Ethel, yeah, she had dementia. Yeah, she was in a nursing home for 3 or 4 years. And then I kind of asked me, how did they go about paying for that? Did the family? Oh, it was expensive. They had to sell some of their land. They had to liquidate a bunch of the assets and stocks. So at this point, I usually like to say, can you see how some of this stuff, as you and your wife age, how this could happen to you? I hate always using stats, but the stats are they are what they are. And I'm gonna tell you the bottom one. Well, first of all, women are especially at risk. 80% of new admissions into nursing homes are women. They usually outlive the guy. The women are just tougher than us. I don't know what the deal is, but they just seem to always be the ones that live longer. And as you get older, they need more care, of course. So they're 80% of nursing home populations and new admissions. But here at the bottom, this is one I used to love to tell people. And you can go through each one of these stats with them, et cetera, and women need care longer. And okay, 87, I call it 90% of, matter of fact, it's not even on here. This is 87% of people needing care at their home receive it from unpaid family member. That's actually a big fact too. So 73% of your claims start at home. Of those claims, when you're at home, 90% of the time, it's family members that are going to need this care. Another stat that's not in here, it looks like, but I'd like to use a lot. Yeah, married couples. I'm sorry, it's the middle one here. When I was talking to a married couple, I wouldn't tell them, I didn't use the word, if you need care, if this happens, if you have a stroke, I always said, when you need care, remember, not if, when you need care, how are you planning on paying for it? Are you moving in with your children, or are your children moving in with you? Do your children have jobs? Do they coach any sport? I know that when I took care of my dad for 3 years, I was a football coach for my oldest son's team. I was doing the 8th graders then. I was also coaching a 3rd or 4th grade team. I did basketball with one of the other boy. So I had to quit coaching all these sports. I was probably not home 5 days a week. I didn't see my family a lot for a while because I had to take care of my dad almost every day, probably at least 5 days a week, 4 days a week, getting groceries, helping him clean his bathrooms, do his laundry, get his medications out, whatever it was, help him showering. So, I guess when I talk about this with folks, and I don't mind telling a story about your own care situation, if you are someone who has taken care of a parent, bring that up. Maybe it's an aunt and uncle. But when I know that a married couple, 90% of them are going to need care, I frankly just talk to them about it. What's your plan? Knowing that that's 90% likelihood, are your kids moving in with you? Is your kid going to quit your job, or are you going to pay your child them when they don't have their job? Being a caregiver, on average, because people lose wages, lose contributions to 401ks, they suffer from depression. And again, I can tell you, I was squeezed from both ends. A caregiver is 6 times as likely to suffer from depression. On average, they lose about $500,000 in lost wages and contributions to their 401k. So being a caregiver is so I really like to talk about this last stat here. 87% of people needing care at home are relying exclusively on family members. So are you planning on the burden of the children? So I make sure they know these stats and are aware of it. Okay. A couple more slides here. So then I talk about the average cost. This is pretty common. In my presentation, I will switch them out and I will show them either using Genworth's cost of care surveys, or MetLife used to do one. Mutual Omaha has a good cost calculator. So I'll just go right to their area. I'll show them, look, hey, it's $108,000 a year if you're in, I don't know, Massachusetts. Now, if you happen to be in Shreveport, Louisiana, it might be $54,000 a year. But I show them the local costs. And buying a home by assisted living is still expensive. And even if you're getting care at home, that can be more expensive than assisted living. So you show them the cost and go through that with them, and then explain to them that who really pays, right? So basically, if you look at the gray here, this is all stuff that's being paid for by Medicaid, all right? This big chunk here. 13% is Medicare, because remember, Medicare only covers that first 100 days or even less than that. So they're paying a chunk of it. The veterans, a lot of times veterans will think they're going to have some veterans pay, and they do, but the problem with the veteran coverage is there's only so many rooms in these beds, and they go to the more needy. So in other words, if you have like a 70% service-related disability or a 90% service-related disability, and your income is such and such low threshold. So the problem with the veterans is, yes, they have care for you, but the people that have the highest service-related injury or ailment and also have the lowest incomes qualify first. So it gets kind of dicey to have, and I never want to tell a veteran, by the way, that you're not going to get cared for. Boy, that's a sticky one. I try to explain to them how the veterans benefits work. And if they feel like I don't want to argue with the veteran ever, I respect them too much. So I'm always careful about how I explain the veteran stuff. But it's the likelihood of you getting covered from veterans is tough. Private health insurance is only paying 5% right now. And remember, that's that number over here. Medicaid's getting crushed. So the private health insurance needs to expand, certainly. Okay, frankly, there's three ways to pay for long-term care. After I went through and created this need, you can be very, very rich, have $1 million plus. You can be very poor, have less than $3,000, or be insured. And there's really no other ways around it. And hopefully at this point in the presentation, they'll see that. You can't transfer it. You can't hide it. You can't have your kids take care of you. You can't, all these things that people think, we're kind of eliminating all these things. So you can be rich, you can be poor, or you can be insured. Now, not many of the people you're going to run into are going to have millions and millions of dollars of assets, right? They won't buy long-term care. Their financial planner is going to tell them to do something else. They're too smart for it. And then the very poor people you can't sell. So that leaves a whole lot of people that need to be insured. Okay, great slide here. And again, we're coming to the end here. I know it's been about 30, 35 minutes. So the walls around your state. And I love this slide. I really do. So if you look at most people out there, okay, they have insurance, right? In case their house burns down, tornado, right? Fire, tornado, they're going to have house insurance. I know a lot of times you're required to carry it if you have a mortgage, okay, but just bear with me here. So most people, if not everyone, have car insurance, right? They got to, again, liability, you have to have, at least if you have a loan, but once your loan's paid off, you can have liability. So people have health insurance, major medical issue. No one runs around without major medical, right? So let's look at percentages. So the chance of your house burning down or losing it to a tornado, 1 in 1,200. The chance of you having an unfunded car accident where you didn't have insurance and you lost, $10,000 or more in a car accident, 1 in 240. If you look at having a major heart attack, 1 in 15. This is why so many people are afraid to not have health insurance, right? But look at your chance of needing long-term care, which, by the way, takes away your car, your house, your assets, everything. It wipes it all out. And it's 75% likelihood it's going to happen to you. It is by so far and away the most likely thing that's going to happen to your clients. It's not even close. Yet people have this mind that they're going to do they got to have their fire insurance, they got to have their car. If you're betting, if I'm at a horse track, I want to bet, and I could bet the same amount on any horse, I'm going to take the favorite. So I would think I want to protect the biggest thing here. This takes my house, my car, all my 401ks, right? All my assets, all my stocks, so this is just a rethinking of how people are trying to address this. So I love this slide. All right. So why do people buy long-term care? I've already kind of covered this, I've been going through, but choice independence is number one. In other words, what motivates people to buy long-term care? Don't worry about the protection of the assets. I'll just tell you, if you sell on, hey, you're going to lose your assets, the government, you're going to lose your assets, you won't do as well. I want to be able to call the shot. If I end up in the state program, they're going to maybe ship me to this Medicaid nursing home or that one. Remember, the budgets are winding down. I don't paint a very pretty picture of Medicaid to my clients because, frankly, it's going to be a nightmare 20 years from now. I can't imagine. It's already bad now. Just imagine how unfunded it's going to be 20 years from now. The nurse to patient ratio, the lack of funding. Now the fact that these poor nursing homes are needed to do the PPE equipment, the face masks, they have to pay hazard pay for anyone to work at them. I read something recently, that 90% of nursing homes will be bankrupt within the next 2 years because of COVID. So I don't know what happens to all these places or facilities or how they're going to go about it. So the choice independence, I think people want to call the shots. I want to know where I'm cared for, when I'm cared for, how much care I'm getting. I want to be able to be in control, right? That's the number one thing that motivates people. Second thing, I don't want to avoid my children. My son does coach his son's football team. My daughter is the head of her Girl Scout, and she also has a second job. I can't have her taking care of me. She's got children of her own. So people don't want to burden their children. Third reason they buy it is they want to protect their assets. They would like to, all this stuff they built up, they'd like to see that to go to their children naturally, right? So a long-term care plan can basically take care of all three of these. That's what it does. And I do the emotional side, this choice independence and avoid burdening the family. I sold a lot on that because I believe that. I've seen it. I've lived it. Okay. All right. So what would be your reason for buying long-term care? And then I put it right on them here. Would like your quality care be more important to you, or would not burden your kids? They'll tell you at this point. If you ask them these questions, you want to protect your assets. You pass on your legacy. You want to wipe out your spouse. I mean, what is? So you look at these and then just let them talk. Which one's more important to you? They'll tell you. Oh yeah, my kids are busy. They couldn't. No, they or oh boy, I don't want the state telling me what to do. Well, they're anti-government people, whatever. They're people are all kinds of people out there. But they'll tell you what their reason is if you ask them these questions. Okay. And then just basically design a plan around that. So then, but the plan is to keep you out of the nursing home. I mean, that's me your plan here. Let's put together a plan that's going to work. So I can design a plan that's totally focused on price, bare bones, minimum, heater and keys. Or I can do one that's more planned on focused on great benefits or anywhere in between. Another thing I used to say here is, let's see if they have the slide here. Notebooks. So I used to tell them at this point, can you afford like 20, 30 bucks a month? Yeah, I can afford that. Or, can you afford $700 a month? No, I can't. But you can afford somewhere in between there, right? So we can design something. Something is better than nothing. Even if the local costs are $6,000 a month for a nursing home, if I sold them $4,000 a month coverage, they can handle the other $2,000. They can handle taking on some of this, but you're shipping some of this risk onto the long-term care company insurance plan. And I don't care if it's half the amount. So I'm not going to buy a complete protection, but I'm going to, maybe buy a $3,000 a month policy. I can cover the other $3,000. So something is better than nothing. You don't have to design home runs every time to cover everything. So one of the things you should do as you're designing plans is address with them, what their income and assets could do and what they couldn't do. What would make you have to crack into your, instead of just having to take the interest and the dividends in there, I don't want to actually break into the principal or into the actual investment itself. Can we just take what's coming off of it without having to do that? How much money would you need to do that? So, this is when you design the plan for them. And then we do understand that we have plans here that take care of all progression of care. So the plans are going to pay cash, no restrictions from day one. This way you can pay your family members, friends. You can pay the neighbor kid who's maybe, I don't know, mowing the lawn for you, or the northern part of the country shoveling the walkways or shoveling the snow for you. You can use it to pay bills. You can use it for anything you want. They're going to simply send you a cash payment so you can pay all that informal care we talked about. 87% of care is family members. Okay. So you want a policy that's going to be able to pay everyone in that respect, right? So that's the progression of care. But now if I do end up, in a home care situation, my spouse or my neighbor kid isn't probably a trained physical therapist or an audiologist that can help me, walk again. Or so you might need to have a nurse come into your house, a physical therapist, et cetera. So this is professional care that comes to your house. You want a plan that's going to cover that. Therapeutic devices, medical alert systems, again, RNs, LPNs, they're coming to your house. Thirdly, is you got to have the facility. So if worst comes to worst, that I've got Alzheimer's now. We don't know what we try to take care of dad for a while, but we can't. Mom doesn't have the the skills or the strength or frankly just the resources to keep him here at home anymore. It's time to go to the facility, and so you want a policy that's going to cover that as well. So first of all, pay family members and friends, and that's the normal progression of care. We try to rally around the guy or the spouse, the mom and the dad. We try to keep them at home. At some point, then we start supplementing it with some home care. And then at some point, if it gets worse, we end up in a facility. So you want a plan that's going to cover all three. So it's important to have all three of those covered. So let's design a personalized plan for you. And then we just kind of go into the software then, and we start developing plans. And by the way, when we get to that point where you want to put together a proposal, or maybe you get done talking to a client and you're not sure what benefits you should maybe be selling these people. If you ever want to spend time with myself or John Randall, some of the other directors here or marketers here, we're happy to design a plan for you based on what your clients' needs are, their health, what they're looking for. So let GoldenCare help you with that. But that is the presentation. Now, after seeing all that, if you're still maybe a little intimidated, not sure how to sell long-term care, maybe I'm not sure I could do what Jeff just did there. We do have a referral program that can let we're talking about well-trained long-term care salesman ninjas that will come in and sell any one of your clients that that needs long-term care, and you'd like to pair them up with a professional. I think you earn 40% of the comp, split the comp with them. They'll sell it for you. They'll pay you half of it. Everyone wins. That's at integrityltcdirect.com. Ask us about it. We'll tell you about the referral program. Some long-term care, some financial planners, some agents, they do Medicare, they do burials. They realize they can't do it all. And so it's a way for them to make sure their clients are taken care of at the same time getting paid. So it's pretty neat little system. So anyways, with that, I want to thank you. Oh, I lost her here. Let's go back to this. All right, with that, that's all I got. So I'm actually going to escape out of here now. I'm going to look for questions. Let's see what we got here. Boy, we got some people that have been around for a while. I got someone asking about the philia responsibilities. That's interesting. You know, that's a great topic, Don. You know, there are laws in the books that say if you don't take care of your adult parent or loved ones, the state can actually go after the children now to get reimbursed for the fact that they were in a Medicaid nursing home for 3 years. So I remember the South Dakota Supreme Court ruled it constitutional to bill an adult child for their parents' care because their budgets are running out there. And so the philia laws are in effect. These go back to Europe in old times, that back in the day, back in Europe in the, I don't know, 1700, 1800, believe it or not, governments, countries thought it made sense that elderly or aging parents were a family's responsibility. The state didn't pay for them, so a family had to pay for that. And so those are philia laws. Okay, we got another one here. They talk about the veterans aid and attendance benefit, which is very true. There's an aid attendance benefit. If you have the book on that, it's quite a thick book to navigate through to help veterans with how they can apply for the extra aid and assistance. I can tell you that I went down that road before. It's a lot to get filed for. It's a lot. There's a lot of different certification or excuse me, levels of care they do receive, but there's certainly some things to look into with that aid and association benefit. I'm very aware of it. Remember, at the end of the day, only 2% of veterans get any help, but there is the aid and assistance program that you can file for. And I don't have the numbers right in front of me. As I recall, if you qualify for this, they send you like $2,000-3,000 a month that you can use towards your care. So that's certainly something, if you run to a veteran, you can talk about. My experience, just between you and I, John, that boy, once I hear they're a veteran, I really thank them for their service. If they're looking at the aid association or they think there's veteran coverage, I don't like to tell them they're not going to get it. I just kind of tell them good luck. I can tell them that it's, you know, I don't want to tell them that it's hard. I don't like to discourage them, but I just, in my own experience, having worked with, I don't know, 50 veterans, I suppose, over the year, maybe 100, it's so rare they get any help. And I don't want to be the bearer of bad news for that. I kind of walk away from those sometimes. But yes, if you want to spend the time kind of being a social worker, you can go through and help them file for the aid and attendance benefit. But there's a lot of research there. There's hundreds and hundreds of pages to go through on that. So if you're really dedicated to that client, then that's great. A couple more questions. Will you send this with a new slide? They're probably maybe updating the Washington State slide probably. And then, who pays for long-term care? The red slide there. Let's look here. I'll just go back and look. All right. So let me move that. Oh, they are. Huh. So Medicaid, you know, I'm not sure on that. Let me address that. The red portion is, I know that Medicaid right now pays for about 60% of people that are, you know, receiving benefits. Medicare was another, I thought more than 13% here. And private pay. The red portion? Yeah, my bad. This is the area, the reason it's in red. These are people out there right now that are in a nursing home that are basically systematically being spent down. They're paying $7,000 a month because they didn't have health insurance. They haven't qualified for Medicare or Medicaid. So that chunk there, about a quarter of people, are basically being depleted at the tune of $100,000 a year. And it's hurting. I mean, I get phone calls from folks that, you know, they'll say, hey, mom and dad just from a nursing home, they went $350,000, lost $350,000 in a 4-year period. I don't care what it costs. We need long-term care. So that red portion there, that's the private paying people. It just tells you how many people are being crushed by long-term care. All right. All right. So, boy, yeah, you're right. I think so. Thanks, John, for your comment there in the aid and attendance. I hope I answered that correctly. That's all the questions I got here, folks. And I know that we kind of got through. It's about 2:45, 2:47 now. So I don't like to make these too long. I do want to say thank you sincerely for being on board here today. I hope some of what I've told you has helped you. Use whatever pearls of wisdom you can extract from this presentation. But I do really believe in long-term care. I still do. I still think it's the best way to solve this problem. is a pure long-term care plan. If they can't qualify, maybe a short-term care plan, maybe some of our GTL critical caches or a home care only, but I just want to end with this. I promise you, your folks are needing this information. They, maybe they want to ask for it. There's not a lot of trained or people who want to talk to clients about this. So I just think you'll be amazingly surprised at how well received the topic of long-term care might be. And if you want to set out to your existing client base, maybe you got 400 Medicare clients or life insurance clients or what have you, if you want to have like a pre-approach letter that just lets people know that, hey, I do long-term care. A lot of my clients have been asking about it. I just want to make you all aware that I do long-term care. I'm happy to talk with you about this, design some plans for you. It's really a good idea to send a letter like that out to your client base. I think you'd be surprised at the response you got. Okay, so with that, I want to thank everyone for coming on board. We're going to go ahead and wrap this. You will receive a copy of this, I believe, in your email. Any other questions, concerns, please give us a call to the marketing office. We'd love to talk, help you write more long-term care. 800-842-7799 is our number. Of course, you can visit us on our website at GoldenCareAgent.com. And do remember, if you can't attend a webinar or you're just curious, we have all of our webinars recorded and they're put in a video library. They're at our agent website, GoldenCareAgent.com. So if you can't listen live, you can always listen to all these things recorded. You can listen to other people other than me. We have all the different directors and marketers that have pre-recorded all these presentations. So they're at your fingertips, ready to help you. So we want to help you in any way we can. So with that, I want to again say thank you and good luck selling out there.
Check out our website, GoldenCareAgent.com, or give us a call at 800-842-7799.